right, this is still Market Pulse. Right now, we're picking up the pulse of the day, and joining me to make sense of the market activities for today is MD, Chief Business Officer, Optimus by AfriInvest. We have Ayodeji Eba. Good afternoon, yes.
Yeah, good afternoon.
Good afternoon. So, yes, always a pleasure to have you in and look forward to having you more often. But picking up from activities we saw on the NGX today, we saw a good number, and we have been seeing of late, even last week, oil and gas sector, they were top performers last week. Today, again, a good number of them up there as top gainers. So, I mean, what do you see ahead as well? Do you see the oil and gas sector continuing to, carry the NGX when it comes to gains?
Okay, thanks. I think the first thing we need to note is that what is now attracting much attention to the oil and gas space is the rally we are seeing in Oando shares. So what typically will happen is that when people that have missed out from one particular stock and they feel that all other stocks that are within that space too may also begin to enjoy that rally. But we look at it fundamentally, that stock or that sector is also benefiting from the devaluation of the Naira because most of their businesses are in foreign currency, so which is positive for them. And a lot of the local players there are also trying to go into mergers and acquisition, which would also increase their output. So we think that, yes, for now, it's still sustainable, but we think within when you look at the GDP data that was released last week, see that oil refining and the oil sector grew, but still at just a reasonable level. And you also look at oil production dipped to 1.4 million barrels per day relative to last quarter, which also shows that there's a bit of concern as we progress for the downstream sector within that upstream sector rather within that space. So I think that investors should be cautiously optimistic about the sector in the medium to long term. But now investors should, when you look at the Oando shares, the rally seems not to be abating, and investors should just ensure that they are also very careful so that they don't buy at the very top of the market.
At the very top of the market. So you saying that investors should be careful so they don't buy at the top of the market somewhat suggests that you do see the rally slowing down, right? You do see perhaps drawbacks ahead. We know that today Oando officially crossed the 1 trillion naira mark, right? 1.05 trillion naira. So do you see any drawbacks ahead, or do you see them cementing their space at their place as a stock worth over 1 trillion naira?
Okay, thanks. I think that we would see a bit of moderation. I'm not saying Oando will still appreciate. So today we saw volumes, a lot of people taking profits. So today, and people still bought, and the demand still remains very high. But as the price improves tomorrow, the demand, if you require 1 billion for 1 million units, by the time the price continues to increase, that would also impact on the ability of units people can buy. But the main thing is that a lot of people have bought these shares even at 10 naira this year. So there's a risk. So it's a risk reward. So for any investor coming in now, the risk is higher. Fundamentally, for Oando shares, there's been a lot of interesting news about the acquisition. So fundamentally, we may say it's strong, but we've not also seen that translating into the revenue. We need to see the audited accounts. Right. We need to see how this would translate into that into the bottom line before we can now affirm this particular position to that company.
Indeed. I think that's something very interesting to look out for. And I believe by the end of this month, perhaps we should see Oando's earning results, and we'll see the effect that has on the markets. But right now, the rally continues. You mentioned, obviously, the macroeconomic data and some of the macroeconomic conditions somewhat favoring the oil and gas stocks. But we also see that, some of that data that was released last month, in the month of August, from inflation data, latest GDP reports indicating growth in the Nigerian economy when it comes to the second quarter. But despite all this, macroeconomic data, the stock market performance, aside oil and gas, hasn't, mirrored that broader economic, performance. What are your thoughts on this, and when can we begin to see some sort of recovery, full recovery in the markets? Yes, the last week of August may have been fair, but if you look at August, there was a decline. So when can we see the macroeconomic data begin to, play out with market performance?
Okay, thanks. So I think we need to also step back a bit and look at where the market is also coming from. Even year to date, market has taken about over 20%, which is very positive. But part of what happens, if you understand the structure of the market, is that we're seeing a bit of a drawback within the banking sector space. So that's during the announcement due to the announcement of the offer, and as well as some of the policies of the government. In addition to that, you would see that the bellwether stock within the industrial goods, which is Dangote Cement, in the last few days, we've been seeing that also that stock shedding some weight, which has impact when you look at the weightings on the stock exchange. So by and large, when you put that together, we think that the market is still performing very well. When you look at the market today, banking sector stocks gained at least over 1%. We saw significant interest in that in the stock, despite the expectation that investors are expecting that there may be a dilution post the offer period. Zenith Bank opened the earnings season within that space with the interim dividend of 1 naira, which is very impressive, and that is sending a very positive signal to that to the space. And
you're saying you're seeing signs of a recovery ahead.
Yes, I think that there will be signs of recovery, but we still expect post offers when some of those companies begins to list their institutional shares. There will be a bit of volatility. Then, based on the performance of those banks, they will begin to see an upward trend as we progress.
All right. Thank you for that. Of course, we know that the market is now down to, I believe, 29.1% from the high of 39.8 that we had earlier in the year. But I mean, you've mentioned the banks, right, and how they are influencing the markets. There have been some reports, right, that a significant portion of retail investors' inflow appeared to be gravitating towards the bank recapitalization efforts. Nearly ₦1 trillion raised in just a few months. Nigerian Tier 1 banks' combined market value has jumped to 4.81 trillion. So would you say the Nigerian banks are, diverting attention away from, the NGX, considering, the recapitalization exercise, and then we're seeing the performance of the NGX of late?
Yeah, definitely. We can say that we are seeing rotation of funds. So investors are trying to lock into the public offers. So as a result, they may divest from some other sectors, looking at the long-term potential of the company. Then there's also been interest from a lot of new investors too that have taken over, that have invested in the offer. So you are correct that when even you look at average volume in the market, given the spread or the gap between the offer rate and also the market rate, so a lot of investors are also buying that should have purchased the offer, are also buying the shares on the Nigerian exchange.
All right. Thanks for that. Let's move to the industrial sector finally, right? That sector has been showing signs of weakness since July, after obviously the robust start to the year. It ended August with a significant 13% decline month to date. Market dynamics are evolving, and we know stakeholders are also closely watching for any signs of recovery, or further decline, right, in this pivotal sector. So what signals are you getting right now pointing to a recovery or further decline ahead?
Sorry, can you come again?
So, I mean, focusing on the industrial sector and the decline that they have seen earlier, are you seeing any signals that, could point to a further decline ahead? Or are you seeing signs of recovery within that industrial sector, considering the weakness we have seen of late?
Okay, thanks. If we look at the weakness we have seen, can be traceable to one particular stock, Dangote Cement, which has remained at almost a level for months after the major rally we saw earlier this year. So we think that as liquidity uh, comes in into that stock, it becomes very tradable, then we feel that share prices will still come down to a level that before it becomes attractive for investors and we begin to see activities there. So any major decline in Dangote Cement will have an overall impact, no matter how other stocks within that space perform.
Yeah.
So I think that we should still see a major sell-off in Dangote Cement.
That's not exactly good news, within that sector, considering Boa Cement is also on the decline. But thank you so much for all the insights. We've been speaking with the MD, Chief Business Officer, Optimus by AfriInvest, Ayodeji Ebo. Thanks for joining us.
Always my pleasure.